The real estate market has been bananas these past few years, and I get this question asked probably more than any other question. Mike, should I buy a home or build a new one? That's the debate. The cost of building during and after the pandemic with supply shortages and labor shortages really skyrocketed. And the questions are, have the prices come down? Are they the same? Are they up? Are they sideways? What does this all look like? And we're gonna cover all of that right here. Now, if you're already building a home, grab our final walkthrough checklist. People from all over the United States have requested and used. Leave me a comment, I can get that to you also. And here's a video covering all of that in detail. And pro tip, one thing you do not want to do, be sure not to do, is walk into a builder's model or talk to a builder without representation. As a contractor's son, I've seen all kinds of shenanigans happening during the building of a home process. And people that went unrepresented often were taken advantage of, where they could have negotiated down the price, they could have negotiated down the lot price, they could have negotiated in improvements, or the construction was done incorrectly and nobody caught it because no one was representing you. Call us. Our representation for new construction is no cost to you, not a dime, not a penny. My name is Mike Perna. I'm a local real estate agent here in Metro Detroit for over 20 years, and myself and my team help over 1,000 families just like you each and every year. Scope out our Google reviews, and I'll link to that below. We get calls every day from people just like you, and we love it. And as always, there's no obligation, no pressure. We definitely didn't get to where we are by doing sales shenanigans like that. But we do have your back on buying a new home or building a new home. Now let's get on with it. So should I build or should I buy an existing home? That's the question we're covering today. This is also a personal one to me because I've considered building myself, and I've looked at lots and builders, and at also being my own general contractor. And some of the quotes I've gotten have been alarming. Some of them have been pretty reasonable. So I'm approaching this answer from two different perspectives. One is a personal choice, as in it's more about like my family and their long-term needs and wants, or is it an investment choice? Does it pay off financially versus buying an existing home? Let's start with talking about what's happened with the pricing of building a home over the last couple of years. According to Redfin, the median home sales price as of September 2023 was $412,502. Now that number over the summer was 25 or 30K higher. We're seeing a slight slump in pricing right now, not only Metro Detroit, but nationally. But mostly that median home price has dropped 25 to 30,000 just in the last few months is because first-time home buyers with the interest rate hikes are still in the market buying homes, but our move-up buyers that have a home to sell, and frankly, they have an interest rate below 4%, are staying in their current home longer. So instead of moving up into the next bigger home, they're trying to stretch out the use of the current one. So the prices actually haven't gone down. It's just that there are so many lower priced first-time home buyer sales happening right now is taking the median down. So $412,000 is the national median home sales price right now. Looking at the National Association of Home Builders data, they're reporting the average cost of building a house, no lot included, building a house is $329,000 plus the cost of the lot or land. And that's for about a 2,000 square foot house. So if you're finding land where you are at, let's say $100,000, then that's $429,000. I'm finding lots right now around $200,000 or $300,000, so that moves it up to $529,000 or even $629,000, which makes it much more expensive than the average $412,000 price range. And of course, there's more to that as well that we're going to dive into. So when building a home, according to Forbes, there are three major factors to consider where prices have really jumped around up and down through the last couple of years. First one is lumber, and then labor, and then the loans themselves. There's been a lot of fluctuation on all three of these, and we're going to talk about all of them and how they impact building a home. And we're going to start right now with lumber. During the pandemic, we saw lumber prices skyrocket. We saw it peak out at $1,686 per 1,000 square feet in May of 2021, where lumber prices now are falling back down to pre-pandemic levels. To put that in perspective, pre-pandemic levels was about $500 per 1,000 feet, so it's over 3 times the amount. But what does that mean for us thinking about building? For a 2,500 square foot home, the average cost to frame and sheathe the home is about $40,000 today with current 2023 lumber costs. Now at the peak, that same lumber would have cost the buyer $130,000, and that's an insane upswing. For people that were building or committed to building during the pandemic, that really hurt them. Most builders have material price fluctuation clauses built in their contracts, meaning that if a material changes price by more than 5 or 10%, the buyer would be responsible for the difference. That's a $90,000 difference, guys. A lot of people building homes got that call out of the blue from their builders or their contractors that their home costs just went up $70,000, $90,000, $120,000. Suffice it to say, there were a lot of lawsuits, a lot of people walking away from their deposits, which was a large dollar amount in and of itself. But for us today, back down at the 500 range, new construction prices have largely stabilized, even if all the costs have not fully come back down yet. Next up driver of skyrocketing home prices are labor shortages, and this was impacted from 4 different directions. So during the pandemic, about 250,000 people in the trades actually died, which is very, very sad. And then second way labor got hit is people like my father, who's been an electrician for over 40 years. And about 500,000 people just like my father decided to quit working altogether and actually just go full retirement during the pandemic. This alone dropped the number of available people to do the construction work by over 7%. And that number was already low because the millennial and the Gen Z generations are choosing professions outside of construction or skilled trade at a higher level than the previous 2 generations, Gen X and of course the boomers. But the perfect storm was when interest rates dropped drastically and companies started taking on large projects because the loans were so cheap. It sucked a lot of the contractors out of the market that would have been available to build homes because companies could actually afford to pay more because the interest they were paying on the project was so low, and there was a genuine building boom, not just for new construction, but for commercial as well. And then there was also a boom in home remodeling as well, as so many people were work from home and decided they wanted to like where they worked and lived, and they were spending so much time there now, and with interest rates again so low, they can afford to take on those projects, which put even more pressure on current labor wages. It was literally the perfect terrible storm that caused a situation in an increase in construction costs, but also an extension of construction times because of labor shortages. So I looked at putting an addition on my home. In 2018, I was quoted $65,000 in about 3 months. Not bad. In 2021, I was re-quoted the same addition at $122,000 and 9 months to complete. 9 months to complete. Bananas. Now, this is one of the most expensive, and it wasn't always this way, the construction loan itself. So there are several types of construction loans out there, and the most common one was one where the construction loan would roll into a regular mortgage at the end, whatever the rate was at that time. So I saw people start building a home, and against my judgment, against my advice, get this type of loan because it was cheaper than the alternative. And I'll talk about that in a moment. It was cheaper because it was 1/8 to 1/4 point less on the interest rate, but it seemed for many people like a really good gamble because rates had just been so low for so long. Before 2022, that gamble 100% paid off. And then it was like betting on red and then the wheel hitting 00 just over and over and over. Rates have risen the fastest they have in the last 40 years in the last 18 months. One client I had advised not to get into this loan saved about $2,800 in interest over the 14 months it took to build the home, but loan rates on the end loan had moved from 3% to 6% over the time he was building. So the same home on a monthly payment went from $2,740 per month to $3,897 per month. That's $1,150 more per month, or $13,800 more per year over a 10-year period that this family is going to be in that home. That's $130,000 more in interest paid. This is what has caused so much turmoil for people that were building with this loan type. Now, there are other construction loans that were 1/8 to 1/4 or even 1/2 point more, but that rate was guaranteed to be locked in for 30 years. They would lock the rate today, not 10 or 12 or 14 months from today when the home was finished being built. So if you locked in at, let's say, a 4.5 and rates had gone to 6.5, you still had that 4.5% rate. That's a huge win for those buyers that had started building as the rates were increasing. So today's rates are now sitting about 8%. Now remember that now that we've started to stabilize with inflation coming down, it's 8% whether you're buying a new home or buying an existing home, but it's going to probably not go to 9 or 10 or even 11%. I don't see that in the cards. Another question that people ask me all the time is, Mike, why are you still buying investment properties and are you getting loans on them? Yes and yes, because when it comes to investing, I'm not paying that 8% interest rate, the renter actually is. When interest rates go up, rents also go up because the landlords raise rents because of rising costs and because fewer people can afford to buy a home and therefore more people must rent. That's more renters driving the prices themselves up. So there's a bit of a lag between them, but the bets I'm making today will pay off big when the rates go down. I'll be able to refinance down the payments, and then the values will go up dramatically as renters re-enter the market again as home buyers. In the meantime, I'll just keep re-rating that property because when rents go up, they do not ever go back down. But I digress. Let's get into the conclusion of this. Here are the pros. If you build, you get exactly what you want. You don't have to worry about bidding wars. There's no need for renovations or repairs, as in roofs and furnaces. All of it's new, so you've got 10 to 20 years before you have to worry about any of that. Also, new homes typically, but not always, appreciate 1 to 2% per year faster for the first 5 to 8 years after they're built than existing homes. Now, the cons to new construction is there's a lot of stress from things constantly changing if it's not set up right, which, by the way, we can mitigate that and we can help you mitigate that. Many builders, because of high demands, are right now not negotiable on pricing. If you don't watch your contract, there could be cost overruns that can cost you a ton should some disruptive thing happen in lumber or steel or copper or whatever that looks like. Now, it's not likely we're going to see another COVID, but we also didn't think we'd see one the first time or the last time it happened either. Build times are speeding up, but some builders are promising 8 months and still delivering out 14 to 18 months for keys for that home. And if you don't get a locked rate loan, you could wind up getting a higher interest rate if the Fed decides to raise rates again. And now, not one person or economist predicted we'd be at 8% right now. In fact, most people thought we would go up to 6, but now we're at 8. So while nobody's predicting we're going to 10, it really could be a 10% rate in 6 or 8 months from now. That could actually happen. Clearly, fastest rate increase in 40 years. So I'll tell you where my mind is for my family at the end, but some key points I believe you should bear in mind. Every property you own, whether it's the one you live in or rentals, should be regarded both as a place you live and as an investment. And what I mean by that is simply put, homeowner's net worth versus a renter's net worth is 40 times the amount, literally 40x. And that's because there are a ton of financial upsides to owning that you do not get with renting. Now, the home you live in is still your castle. It's your place. It's your home. But it's also building equity as you pay down the loan, the value is increasing, and you're getting money back on your taxes from the mortgage interest paid, none of which you get from renting, and all of which compounds over time. But think towards the future. You might rent it out in the future and turn it into a rental or an income-producing property. If that's a potential option, be sure you keep that in mind when you're choosing a home and make sure you know, okay, I'm going to live here for a few years, so it does need to check some boxes, but because this is going to be a potential investment, there are other boxes that supersede my needs and wants boxes. So I did that several times in a row through my life, and I've got cash flowing rentals where I bought them and I lived there for a couple of years, didn't necessarily love the home, didn't love the locations, but I knew they would make great rentals. Now, if the loan, lumber, and labor costs come together like they are right now, my advice is build. But if you don't have the financial reserves to withstand a $50,000 or an $80,000 price swing or a possible $500 or $1,000 per month payment change, and I know I can't, buy an existing home. Now, the only loan I'm willing to do is the one that I'm locked in 18 months from now when the home is built. It will cost me a bit more, but there won't be a surprise at the end either. So my answer is build a home because I want a home with a gym, a theater room, 2 offices, and a lot of what I'm looking to put into a home is to actually save me time, so it's worth it to pay a couple of extra dollars. Also, my mother has MS and she can't do the stairs anymore, so I also want a full bed and a full bath on the main floor, kind of a second master suite, so when they come and stay with me, she doesn't have to do the stairs. Also, by not going to the gym or having an office in my home, and frankly a theater room because I'm a huge movie guy, I want that too, it will save me a ton of commute time back and forth I can put back into the process of helping people buy and sell homes in Metro Detroit. I want that too. I have been scouring for the last couple of years and there is no home on the market or has been on the market in the last couple of years that fits that exact dynamic or need. I know I'm going to be paying more than I would than if I bought an existing house because the uniqueness, I also know I won't be able to get everything out of it I put into it, at least not over the next 2 to 3 years if I wanted to sell it. I'd have to wait at least 24 to 36 months to see any sort of positive value growth. And frankly, I'm okay with that. I don't plan on moving after this next stop for at least 10 years. So I'll have 7 to 8 years of upside appreciation on that home, even though it's gonna be quite a unique property. If you're in your 20s, you're renting, and you're not in your kids yet, I would buy a smaller, like a $200,000 or $250,000 home or even a $300,000 home. Live in that for 2 years or so, and then turn it into a rental. Then do one more at one more time. And at that point, you've got great wealth creation happening, positive cash flow paying for a large part of your life. And if you have 2 kids, their college bills will largely be paid for just from the rents and the appreciation over 18 years of those 2 properties. So if you're watching this video and you want to dive in and see some new construction homes, call me. And if you're in your 20s or 30s and want to talk about wealth building or wealth creation for your family, cost segregation tax advantages, the Augusta rule, multifamily homes, contract assignments, or frankly anything, reach out. I'm here. Use me as a resource. I'm a wealth of knowledge in this field. In the meantime, guys, be good, subscribe to see our next video drop, which is going to happen shortly. And if we can be of any help, give us a call anytime. Thank you again. See you on the next video.